downstream, but inflation has actually bottomed out. We went from 2.3% year over year up to 2.9%. And if momentum is a factor here, we could see inflation continue to rise. We have uncertainty about tariffs, right? We don't know exactly how that could impact pricing. There is speculation that the longer these, if these tariff sort of situations do cause a surge in pricing, that eventually the producers who are importing these products and selling them to American customers will eventually pass on those prices to the customer. Why? Well, if you're a business, let's say you're a business really quick, and then we're going to bring in Chris Pulver to the conversation. Let's say you're a business and you are bringing things into good old USA, right? So here's my really fast, this is the USA map, okay? There's the map of the USA, not bad. So USA, you're bringing in goods to the USA. But now that you're bringing it into the USA, there's actually a tax coming out, which is the tariff. Well, what does that mean for your bottom line as the business, right? You're the business. If you're the business and now you have to pay a larger amount, you have two choices. You can either eat that and just make less as a company, which your shareholders and your owners will not like and they will disapprove heavily of, or you can pass on the price to the consumer. What's the logical thing to do? If you have to impress your shareholders, the owners of the business, right? You have to impress, you have to do what the owners of the business say. If the owners of the business say, no, we're not going to eat that. We're not going to just take less revenue and like there's people who are invested in this business. We are going to continue to make money. We're not going to take a cut. So what happens? Well, they raise the price of those goods, raise the cost in order to offset the tariffs or the tariff costs, right? So prices for the consumer do go up. And so that is inflation. It's a simple concept, right? Again, that's not the controversy. Most economists believe that tariffs do have pass-through effects to the consumer. The bigger question is how much, right? How much of that is just sort of a one-time hike and what is more of a long-term. Okay, let's try something. We'll bring in Chris Pulver here. Chris, we're dealing with an issue with the cameras here. There's a little bit of stream lag going on. I'm not sure if it's the StreamYard software. We'll just bring in Chris Pulver. Hey, Chris, what's going on, man?
What's up, man? Good morning.
There's no lag between you and I, but the something weird is happening with StreamYard here this morning where the camera, I guess, is mismatched with what we're seeing on the. You and I can see each other, I guess.
Mm-hmm.
I'm going to just let the audience go with it. We're going to just have our conversation and hopefully it works out. We talked yesterday. I was just going through, as you saw there, a little bit of a deep dive on tariff-based inflation and what we're seeing there. Chris, I think inflation is going to remain a thorn in the side of the Fed in this market for a little bit longer. I don't think it's gone, and it seems to be rising.
I agree. I think that in order for us to have this, aggressive growth we're looking for, we're going to have inflation, or else we'd be, heading into that stagflation conversation. But having the inflation, I suppose it's the rate of change that maybe the market's actually going to care about more so than just the number. So, what was our last headline inflation reading, Nick? The not the core, but just the headline CPI. Was it 2.7 or 2.9?
The last one was 2.9.
2.9. So let's say that next week there is data and it comes in 3%. I don't think the market's going to care. If it comes in 3.3, 3.4, the market cares. But if it's 2.9, interesting how the last headline was exactly the same as is forecasted. The core PCE was exactly as forecasted. I don't know. I don't see economists getting it spot on, but 2.9. I don't know if there's a forecast for next week. It's supposed to be a Wednesday, Thursday print next week, but we might not have that data either. So I just don't think a jump up to 3.1 is really going to change the market's mentality. If anything, it's just like, well, maybe the Fed won't cut as much in 2026, but sure. It's baked in with such a high probability that unless it pivots so hard, where the 93% chance in October and the 80+% chance in October and in December, if those change by like 30 or 40% with an inflation reading next week, then maybe the market cares. But dude, we've had this conversation. If you look at price on anything right now, SPY, I'm looking at the SPY. The last major low that we saw is either the just after the Fed and then the FOMC candle. That is SPY at 654.60. We are, almost 20 points above that. There's plenty of support on the 21-day. There's plenty of support on the 50-day. I mean, I'm failing to recognize like what is going to turn the market, and turn the market like sustainably. I don't think inflation does it. I think inflation could be noisy, but I don't think it's going to turn the market to, derail this bull train.
Yeah. And did you see silver this morning, Chris? My goodness.
I just got the alert that it hit 50.
My goodness. Hit $50 an ounce. First time in history, actually.
Yep. So, I went back and forth all week. I put on the shares, the collar trade. I am just going to take a trade on silver. I'm just going to add in, basically it's like, look, to me right now, it's like the time to buy shares is not necessarily now outside of the trade I just took, which is I bought shares, I sold a call. That's, I guess SLV would be my ownership. So I bought shares of SLV, and I bought it around $43 and change. My cost basis is 43.15, and my strike price, my covered call, is $50. So I have some upside appreciation on silver. I also thought, you know what? I can go out on the option chain right now on silver. I'll go to SLV. I can go to silver futures, but silver futures is probably not out far enough for my liking. I'll go to the option chain here. Silver futures, I can go out to March of 2026. I'm going to go a little bit further out on SLV. So SLV, I should be able to go out to January 2027. Now we're trading at 44.55. We're going to open up a little bit higher today. If I do a 45 by 46 or 45 by 50, I could probably do this debit spread. So this is, I mean, if this price is right, we'll see what happens here at opening bell this morning. But if I did this trade, it would cost me, maybe $2 to take this trade, $2 to get $5. All I'm doing is I'm saying, I think by January of 2028, I think silver is going to be higher than $50. And this is at least one way to have a trade in. There's little to no assignment risk. If I take assignment, great. Like assign me short at 50 when I'm long at 45. It'll neutral out to be a positive trade anyway. But I just, the more I thought about silver and like a campaign position, I'm like, I just don't want to just dump a bunch of profit, own it right now at these highs, and expect to see maybe a 10, 15, 20% pullback coming sooner than later. So I'm just going to throw an option trade in out to January 2028. I wouldn't be surprised, Nick, if we see silver up to, if we're breaking 50 the first time ever and it's open space just like gold has been, I don't know why we can't go to 60, 70, 80. I don't know why we can't have silver $100, to be honest.
Take a look at this chart, Chris. I mean, we were talking about this. I mean, you've probably seen this all over social media. I mean, here is silver. I believe this is a monthly chart. Our team put this together, but
let's measure that.
Yeah. I mean, just take a look at that move. You've got monthly candles coming up, failing out, coming up, failing. I mean, if you close decisively here, to me, it is like you're saying, it's blue sky territory where you could break through that and go right up to $75, $100 an ounce on silver, no problem. And I think that, if you're somebody who's watching precious metals, you also have to remember that during this period of time, this is the decades, by the way, of time, inflation has been a real thing. The purchasing power of the US dollar, like this is something we've been waiting for. If you're a silver and gold person, like you've been waiting for this moment for a long time for silver, and here it is. Like I don't, to me, you ask me like, where is it coming? I don't really see this as a very serious level of resistance. Like I think silver, it might have this is a long period of time. You may have the pullback in between,
right?
But I think we're going higher through that high. I mean, I think it's due. It feels wrong for silver to do, another decade where it doesn't break through 50. I mean, that doesn't seem very likely to me personally.
Yeah, I think the run right now, a good clue would be that the run is, pretty comfortably through 50. Let's say we get to like 53, 54, 55. Then any pullback into the 40s again shouldn't really be an intimidating pullback. It should be like, hey, look, there's a lot of good structure here to buy the dip. There's lots of good trend line support coming up that, if you can be as aggressive as you want to be on the shorter term exponential moving average or moving average, whatever you use. I personally would rather see like a minimum 21, probably the 50-day. I like the 50 and the 100 period pullbacks. 200 would be ideal. But if we're comfortably through the high and not getting an immediate rejection, then I think, what would be crazier to me is that we go up to like 60, 65, we pull back to 50, and that becomes support. And this market has no business pulling back to like $40, ever again, which would be crazy.
To me, here's the thing, Chris. When I talk about silver and gold, like, I know we've both been precious metals bulls for a long time, but I would still make the case, and from a trader's perspective, this doesn't make sense, but I'm talking just like big picture. I would argue that at these levels, or at this price point, $50 an ounce silver and $4,000 an ounce gold. I got some flack on my YouTube channel or my YouTube videos because about a month ago, I said, I think gold is theoretically still cheap here. Silver, I would make the case today, is theoretically still cheap here. Again, I'm not making the point that I think like that means you buy it and it's going to be up a month from now.
Right.
I'm just saying that like big picture, silver and gold, guys, the amount of currency that they have flooded. You guys saw those M2 money supply charts during 2020, right? I mean, they just flooded, and they do it consistently. They flood more fiat currency into the system. I know, everybody loves Bitcoin these days, but the original, fiat money hedge is still precious metals. Right. And at the end of the day, that is why I would argue that silver, relative to the supply of currency that they keep flooding into the system, is still cheap at these levels. Now, again, I'm saying cheap from a long-term basis. I think, my opinion, you could buy silver at this level. Again, not financial advice. I think, though, that you could buy silver in 10 years from now, it'd still be a good purchase. So I think silver long-term is still cheap.
Yeah. I think I said this with you a couple weeks ago, but it wouldn't be shocking to see gold known as unaffordium and silver as unobtainium, because it's going to be so difficult to get. And, this whole idea of like what stocks to play in this AI build out, silver and copper are going to be needed for this. I mean, this is a national security interest. This is why silver has been relabeled as a strategic metal, not just an industrial metal. And yeah, I hate to say that it's cheap, because it's certainly not relative to the technicals that we've seen. To have this market be up 50+%. Yeah, it looks ridiculous at 50+% gains for the year, and it's really, really overstretched on a technical side. Yes, but this is also a big fundamentally driven push on both gold and silver. I mean, it is almost like the fact that they are double or triple the S&P right now. Silver's up, I want to say, over 50% for the year, and so is gold. The S&P is maybe at 16, 17 for the year. The Nasdaq might be clipping at 20 right now. But it's nuts. And so, institutions have been in this. I mean, it wasn't that long ago we were talking about the only thing that's trading gold is China, right? Like China's reserve bank, or like China's like buying gold, and they just want dips. And they announced none of it. And all of a sudden now it's becoming more mainstream. Now you're seeing retail crowds on it, which is at some point, I think, where, the retail crowd jumps in. That's where we see the 10, 15, 20% shakeout. But right now above 50, 4,000, was that a resistance level on gold? No. Right. Gold is at 40, 44, comfortably above 4,000. The round number didn't really matter. $50 all-time high. Does it matter? If it gets up to like 54, $55, it doesn't really matter. And now any pullback is by the dip. So I think what I've been struggling with this week is I just parted ways with a 2-year run that has paid really well. It's just now, okay, what's next? But I think we go higher.
Yeah, I think that's the challenge for me as well. Is like I told you this a bunch of times, but basically I had a bunch of long stock positions that I've let go of slowly as the market has continued to push higher. So I'm sort of sitting on cash. I literally have a position sitting in SGOV. We've talked about SGOV before, SGov. Basically just sort of parked on the sidelines and watching a lot of stuff. And it can feel, we've talked about this 100 times. It can feel like, hey, I should be doing more. But really, I think there is a message of patience. And I made the joke when I got on the stream today. It was like every day it feels like I get on the stream, I pour my coffee, and then my commentary is stock market's up. I'm waiting for pullbacks, and go to sleep and do it again the next day. And eventually that will change. I saw something interesting that you might find interesting too. During the .com era, and I know we keep comparing that, but it is I would argue, the most comparable period of time to a new technology taking over everything and all the conversations, which is, the internet back then and AI now. Well, I saw something interesting, which was during more than correction, the full-on crash that took place following the 1999 stuff, right? During this period, the Nasdaq lost like 80% of its value from the highs. During that same period, I saw somebody do a study where Berkshire Hathaway actually gained 80%. They did really well because a lot of the money rotated into the stuff that, Daddy Warren loves.
Yeah, they're probably in value
stuff.
Yeah.
So he was in value heavily, and in the following, it's probably this stretch of period, to be completely honest. It's probably that period of time up to 2009 where a lot of consumer staples and more defensive stuff did well. And so you could make the case essentially he was buying stuff he didn't have. Warren Buffett missed out on some of this for sure, but he bought a lot more not internet related stuff, just value businesses. And to me, maybe a crazy thing to think right now is, should I start value investing? Like, is it so dead that maybe it's not dead in the next 10 years? I don't know. To me, it's like I would allocate a little bit more personally to some of the more practical, boring businesses that just make money, that aren't so connected to tech stocks and AI. Again, I think you want to be in the AI stuff and the tech stuff as well. It's impossible to call the top on those trends, but a diversified portfolio, I still think is probably a wise thing going into the next few years. But again, it's just my opinion.
Yeah, the outperformance. I don't know if we're ever going to see, .com bubble to that degree. I think right now the big difference is we're led by companies that are monsters. I mean, you're led by companies that are moats. You're led by, tens of trillions of dollars. I think the financial markets are, financialized and gamified in a way where it's like, you can't afford to have an NVIDIA fail. You can't afford to have Apple fail. You can't afford to have our Mag7 fail, or else it'll drag the entire market down with it in a big way. But they're also super well positioned where that shouldn't happen. I mean, okay, so Meta is spending, 30 to 35% of sales on AI. Well, if there's even a, 10% return on that investment, they're still going to grow. And also, like, it's not like this isn't an all in. I mean, yes, it's a ton of money to be spending, and it might slow. I honestly think the biggest bottleneck is going to be our energy grid. I think that our wants, it's like our what is it when you say like your eyes are bigger than your stomach? Is that what it is? Like, I think that we want AI so badly that it's like there's so much money getting poured into it. My concern is that there's going to be hundreds and hundreds and hundreds of dead trades out there in the next 3, 4, 5 years that are just terrible because you thought you could chase this AI bubble, when in fact it's like, stick with an index, stick with a sector. I mean, the last month I added XLU, XLE, XOP. I added more like oil, gas, energy. Like, historically, that has been a bit of a value play. I think that one thing we've been very fortunate for, as far as lower inflation, I know it's been trending up from 2.3 to 2.9. Inflation's been trending higher, but the reason it hasn't trended up, I think, more aggressively, I think the reason we're not at 3.5% inflation is because oil prices haven't really had a big pop. Oil's been very contained through this whole, I mean, since the peak in 2022, I mean, we shrugged off 2 major geopolitical conflicts in the Middle East. Oil is still not breaking below 55, not breaking above 75. I mean, I have a
50% drop in price. I mean, that is a very helpful story to the inflation if you think about that. That's
and I have a concern that we don't keep these levels. I have a concern that I think we're going to see, like, there's all sorts of supply and demand manipulation that happens in oil, but I mean, I don't think we have oil going back below $50. And I think it's going to be, manipulated to try to keep it below 80. I think that the scary part on oil is if we go from 80 to 90, 80 to 100, inflation looks very, very different with oil prices at those levels. So, I mean, anyway, I think we've been very lucky that this whole idea of taming inflation, or at least slowing down inflation, oil's been a big contributor to that. So if we kind of keep it manipulated supply and demand wise, where it doesn't break 50, doesn't break 80, everyone can kind of coexist, and there's flare ups here and there, but for the most part, things are pretty tame. But if we are talking, 6 to 12 months from now, and oil's at 75, 80, $85 a barrel, it's like the U.S. is going to feel a lot because it'll be pay at the pump, right? Our AAA gas prices, you look at, I mean, right now, I think nationwide, we're probably in like the low 3s. I can check that right here. So AAA gas prices. National average, I'm curious myself. I've looked at this in a minute. Current average is 311 for regular. So let's say that jumps up to 350 or 399 a gallon. Well, there's your food and energy inflation that you're still going to see expensive stuff at the grocery store, and now you're paying $1 more for gas. Everyone's going to feel that in the US.
It makes sense, Chris, when you start thinking about the fact that like a lot of the market sell-offs that we have seen in history coincide with a rise in oil prices because it's the most, they always say like core CPI matters so much because it removes energy, but energy, it matters quite a bit actually, because if you think about it, it is the volatile component of CPI, and it also is the volatile aspect of the economy. If you get, some country invading another country or doing something where it supply shocks the system, especially in an environment right now, I would say you're sort of ripe for disruption because you've had the economies of the world kind of cooling a little bit here. Inflation is back down, but it's not nearly down enough. I mean, if you get that injection of uncertainty and a spike in oil prices, I do think that has potential. But here's the thing. The reason we keep saying we can't time the top is because how could you possibly call when something like that is going to take place? If China goes into Taiwan in 3 months from now, yeah, that's going to freak out the markets because that's going to surge oil prices, and it's going to just completely derail the kind of stability that we have. I actually think it's a great point. Is part of this rally has been supported by, or sort of just not threatened by, muted oil prices and cooling inflation.
Yeah, I think that's exactly the way to put it. It's not threatened by. It's interesting on the China Taiwan thing. Number one, I still think that U.S. China are forced frenemies. They have to coexist. We keep the optics like very distant, where it's like they're good or they're bad, we're good. East versus West. We need them. They need us. If we want to try to get back ahead of it, look, everything we're doing right now for this AI arms race is in national security interest. If China invaded Taiwan, let's say that we went to war in some capacity. My concern is like, we don't even have the firepower to do it. I'd say that like, yes, we have nuclear weapons, but as far as like, anti-aircraft and missile defense, it's like our munition supplies are really, really weak. I want to say in the Middle East, when we supplied Middle East with weapons like Ukraine, I mean, we ran through like a huge percentage of our supply, and it takes like years to build out. So I don't know, man. It's like, I don't want to talk. That stuff is super scary. And I'm hoping that in 2025, it's not just a big game of risk in modern society, but you never know. It's like, do we talk drones? Who cares? It's really depressing to think like things are already questionable enough. You throw a war on top of that. That's like a global war. That'd be bad. That'd be really bad. But we know the U.S. doesn't go down with the fight. We know China's not going to stop. It is still like this, who wants to be number one? And, China, fortunately, can play the long game where the U.S. is like 2 years and 4 year political cycles. Let's go. We'll see. We'll see what 2026 brings from that standpoint. On that note, I will say that the roughest patch for a presidency and a roughest patch for the stock market during a presidency is the midterm elections. So if Trump's approval continues to go down, if people are not seeing right now, it's like, and I don't know, I'm curious what the sentiment is out there from just people that watch the show. But I'm curious if this has felt like a market that you are actually participating in, or does this feel like a market you're being left behind? Because I mean, there are people that have been on the sidelines since 2008, 2009 that still haven't participated in the market, which is crazy.
You mean like being in the stock market kind of thing?
Yeah, just being, but like owning assets. If you're not in the stock market, if you're not participating in some way, shape, or form, you mean exactly. Yeah. Like the left behind is very real. That is literally the K-shaped recovery. I think that it has been blown wide open since 2008, 2009, and it's been blown wide open again since 2020. And that's why. And how do we know? Well, if the midterms swing hard Democrats and it swings far left, then we know who feels left behind enough to show up and vote and say, look, this system isn't for me. This economy isn't for me because I'm not getting a part of this. Sure. The wealthy get wealthier, and those that are living paycheck to paycheck continue to struggle. What's in it for us? And it's just like an angry mob vote right now. Yeah. So I'm curious, and we don't know this until literally midterms. next fall. And if it swings that way, you'll see like that's the sentiment shift.
That's another thing, Chris, is that like, we've talked about that for a long time, this concept of, the wealth effect, the K-shaped recovery. I know I'm not trying to be a doomsdayer, but in 1929, that is literally part of the equation. It was incredible divergence between people who were long stocks and enjoying an incredible melt up during that time in the Roaring 20s. And asset prices ballooning higher. If you had them, you did really great, and it kept going for a long time, and then it didn't. And then same thing with oil's shocking, surprises. Those are the recipes for stock market crashes. But for now, it's like, you can't call when those things are going to topple over. Usually there's a trigger event. So to me, it's like trend is your friend until it isn't. So that's my perspective on it, at least for now. Real quick, we're going to take a look at some sentiment here, and then we've got our show wrapping up. I just wanted to show you this, Chris, because we do the AAII Investor Sentiment Survey every week. So we got some interesting info there. First, taking a look at the put to call ratio here on the SPX. What we can see here, stock market back to its all-time highs, and call demand surging once more. So calls are back in the popular crowd. We're seeing this just sort of jimmy back and forth the last few days, but we did shoot from huge surge in put demand when the market was down for a day. And yesterday, of course, the big surge in bullishness caused a bunch of people to go out and buy some calls. So sentiment back on the very positive side, at least in the options market. Let's take a look at the AAII Investor Sentiment Survey. Well, another pop in bullishness. So the bulls continue to get stronger here in terms of sentiment. So what we're looking at here for listeners who are newer to the sentiment tools that we're talking about, we're looking at a weekly survey. It's called the AAII Investor Sentiment Survey. What you can see here is this is a weekly filed sort of survey response. And we have actually seen something kind of interesting. If we scroll down, I like this kind of visual here for it. Bullish sentiment is on the rise, and bearish sentiment is on decline. We've actually toppled over from 49.5% of people saying bearish down to just 35.6%. I wouldn't say we're at extremes, but we're definitely getting closer to a point where, if this drops into the mid 20s, I'd say then you've really got, people sort of throwing in the towel on the bearish side and capitulating to the bullish side. So it does seem to be continuing to rise there. Last sentiment gauge, Bitcoin versus gold here. What we can see here is Bitcoin is taking the lead once more, despite gold doing this well. A little bit of change in momentum here in favor of Bitcoin just shows you there is a strong appetite for risk in this market, at least for now. Chris, that's all we got time for today. We got to throw in our next guest, and I know you got to run for your next show as well. Before we move on, if you guys enjoyed this commentary from Chris and I, you can join us inside of our VIP room if you're interested in getting information about that. If you want to get access to the signals we're sharing, we'll drop a link here in the chat to where you can speak directly to a member of our support staff. Just send us a direct message using this link. Let the support team know that you are watching the stream, would like to get some discounts on our VIP memberships. So the Chris Pulver service alert or Chris Pulver's alerts service, all of that can be found just by sending us a direct message, and someone from our team will set you up. Okay, Chris, thanks for coming on, man. We'll drop the link to your channel as well, and we'll see you next time.
All right, see you tomorrow.
See ya. How would you like to win a free copy of the Edge Finder? Well, this month we are giving away not one, not two, but 3 free copies of the Edge Finder to 3 lucky winners. That means if you join, there's a 3 times chance that you are going to be the winner of a free copy of the Edge Finder, which is usually a $1,400 product. With the tools offered by Edge Finder, you can track institutional positioning through the commitment of traders data or the put to call ratio to study what crowd sentiment is currently like on your favorite charts and assets. Or if you're interested in tracking macroeconomic data and how it could potentially impact things like gold, silver, commodities, currencies, and indices, check out our US economic heat map. This table allows you to see all of the major economic readings that things like the Federal Reserve are watching to set monetary policy, and these things drive trends dramatically. Or check out our economic surprise meter, which shows which currencies are stronger than others based on the economic data being released. And you can tie it all up with the top setups page that we offer within the Edge Finder, which scans all of this data and generates bullish and bearish readings for your favorite symbols. So now that you know how awesome the Edge Finder is and that we're giving some away for free, how do you join? Step 1 is to join our Telegram channel. We'll drop a link down below, or if you scan the QR code that you see on your screen right now, that'll take you over to the Telegram channel. That's step 1, pretty easy. Step 2 is to make sure you enter the giveaway using the form being shared in the Telegram channel. Simply fill out this form, takes about 1 minute, and your name is in the hat for a chance to win. And there is no step 3. Step 3 is, I guess, simply just wait to see if you're the winner. There's no harm in joining, so best of luck to you, and remember, 3 people will be winning, so make sure to throw your name in for a chance to win. Just to recap, step 1, join the Telegram. Step 2, drop your name in the form that can be found in the Telegram, and you're good to go. Now let's get back to trading. How would you like to win a free copy of the Edge Finder? Well, this month we are giving...
Hello traders, how are we? Trader Tom here from Simply Forex. Hope you're all having a good trading week. We are going to do the following, guys. I'm going to take a look at a couple of setups that I'm looking at. We're not in any trades at the moment, but we'll take a look at a couple of potential setups. And also, guys, it's your opportunity for me to analyze any asset that you would like, right? So if you want to look at any Forex pair, commodity, indice, then please leave a question and I will happily analyze it. And I will analyze it from a technical point of view, guys. I'm very much a technical trader. So yeah, get your questions over to me and we can take a look. We're going to start by looking at oil because I like some Canadian dollar trades, right? I'm looking at Canadian dollar weakness and we will take a look at those trades in a minute. And that is going to be, you know, on the back of oil weakness, right? So right now, oil is a sell trade for me. And this is the correlation we want, right? If oil is weak, Canadian dollar is weak. So my trades all make sense from a correlation point of view. And we're going to start with oil and then we'll move on to the Canadian dollar pairs that I'm looking at. So I do a top-down approach, guys. I look at weekly, then daily, and then typically I enter on the H4, right? So let's see how that's going to play out. So on the weekly, as you can see, we was in this kind of downtrend range and then bang, right? We broke these lows and therefore broke out of this range. So we're firmly in a downtrend and we had a nice big bearish red candle, right? That is more bearish than a bear. So we are looking for sells potentially all the way back down to these lows here, okay? And that would be a higher time frame target. You know, I'm an intraday trader, so I would potentially leave some profit to run to that level. But weekly is telling me I can sell oil. And now if we drop to the day chart, right, this is also telling me I can sell oil, right? We was in this uptrend, right? And then bang, we broke down. We're now getting lower lows. We're just trying to understand where the next lower high will be, okay? Now, first of all, I like this candle, right? We've retraced enough. We've retraced to our smart river. And we've got a nice big bearish candle, okay? So daily is also telling me I can sell oil as well. Now, the final piece of the jigsaw, if you like, is the H4. And the H4 is not telling me that I can sell oil. Nothing on the H4 is telling me to sell this bad boy, right? Because we are clearly, right, we're clearly in this H4 uptrend. But you can see my alarm in here, guys. This dotted line is my alarm. So if this stops making higher highs and then we eventually get a break of these lows in here, then I will be selling oil. It's as simple as that, guys. There is enough technical confluence for me to take this trade, right? Weekly's in a downtrend, daily's in a downtrend, H4 will be in a downtrend. And we've got this nice room to move into, potentially back down to these lows. And as I said, guys, I'll take some partial profits. Maybe I'll close 70% profit at this level. And then ultimately I'll let profits run, you know, all the way down to that weekly low that we looked at as well. So oil weakness right, because it's heavily correlated with Canadian dollar, is the catalyst for Canadian dollar weakness. And the next trades I'm going to show you are exactly that. So these are things that have not set up yet, guys, but, you know, my alarms are in. I'm ready to pounce like Bruce Lee and Chuck Norris combined. So New Zealand dollar, Canadian dollar, right? Again, let's start with the day chart this time. Because if we look at the day chart, this was a significant enough high because price came down and created a lower low, making that a significant enough high. And then price has come up and we have broken this high. All right, so we are in an uptrend on the daily. Okay, and look at this candle. This candle that was on the back of a, you know, a worse than expected New Zealand dollar interest rate decision. But technicals overcome fundamentals, right? It had a huge rejection. We should be seeing New Zealand dollar weakness continued, right? But we're not. We had a huge rejection at these lows. So we're in an uptrend, huge wick rejection at these lows. You know, I'll be looking to take it up to this resistance level, if not further. Now, again, like oil, we're waiting for structure breaks. And if we look at the H4, we're in a H4 downtrend, like clearly. Yeah, you don't need to be Warren Buffett to know that that is in a downtrend. Okay. And if anything, it's looking like a sell trade, right? Big bearish candle, you know, could it come back down to these lows? It could do, right? But I'm not interested in that. I'm only interested in buys. And I will become interested when we get a break of this high. Right, so if we end up with something like this, okay, and then we get a break of structure on the H4, I will be looking to buy New Zealand dollar, Canadian dollar. Yeah, so there you go, guys. It's exactly the same with Aussie dollar, Canadian dollar, H4. Okay, this is interesting. So, guys, this is the trade that I would want to take, right? And this would be my target, and this would be my stop loss, right? Let me do that again. I clicked the wrong button, right? So this would be my target, and you should know this before any trade that you take, and that will be my stop loss. So if price comes down to this halfway level, I think we have a nice buy trade on Aussie dollar, Canadian dollar back up to these highs. All right, because for me, this big bullish candle has broken that level where price was looking to go lower. So yeah, I'm going to set up an alarm in here, guys. If price gets to that level, we can enter a trade because it gives me a minimum of 1:1. Right, so we'll keep an eye on that. Right, guys, what are you guys wanting to look at? This must be pre-recorded. It's not. Right, what do we want to look at, guys? Aussie dollar, US dollar. Okay, so we've got lots of people wanting to look at US dollar pairs. All right, so let's start with US dollar Swiss francs. This is actually a buy trade for me today. We just didn't get an entry. So again, guys, if US dollar Swiss franc, again, just let's look at the day chart, right? Now we are clearly in an uptrend, right? So we want to buy the market, right? I always want to be with daily trend when I enter any trade. So we're getting higher lows, right? Higher highs, right? You can clearly see that we're in an uptrend. The only thing that is a little bit putting me off is this level through here, right? You can see that price has reacted here many times before, okay? So yes, I want to buy US dollar Swiss franc, but now I don't really want to buy into this level. Okay, if we drop down to the H4 now, you know, we're getting what we want on the H4, right? We're in this uptrend, but it's just at a resistance level. So I cannot take a trade. If over the next couple of days, yeah, we get a nice bullish candle that breaks through this level, right? Yeah, and then we get a retrace to it, then I think we've got potentially a nice trade on our hands. But this resistance level through here is just putting me off. And it's the same with a lot of US dollar pairs right now. So I can see another, Damien wants to look at Euro US dollar. So again, we're getting towards a key support level, right? It's difficult for us to sell Euro US dollar. Now, I want to sell Euro US dollar because again, we're in this daily downtrend, right? And, you know, everything's bearish. Look at the candles, bearish, bearish. I don't even need to look at the H4, right? That will be bearish. But again, you can see this level has proven to be good support. Is there enough room in there for us to trade this? And the answer for me is no. If we look at the H4, yeah, I mean, look, we're still in nicely in a H4 downtrend, but what are you going to do? You're going to start selling here, you know, stops up here, you know, you're selling right into support. And this is the issue with pretty much all of the US dollar pairs. Okay, somebody wanted to look at New Zealand dollar, US dollar. Again, if we go to the day chart, out of all the US dollar pairs, I like this for a sell trade, right? Now, let's start with the weekly here, okay? Because on the weekly chart, this has clearly broken down, okay? We were here and we're in a downtrend, okay? These highs are holding, right? And we broke these lows. We're getting lower lows. So I want to sell the weekly and just look at these candles. Look at this nice area of resistance. It's a really nice selling level. And this was my target I put in as part of my weekly forecast. Now, if we go down to the day chart, you know, I still want to sell this, right? We were in this uptrend and now price has come back down. But again, these lows, look at the wick reaction we had at these lows. You know, remember, I'm an intraday trader. You know, I could hold a trade for a few hours up to a couple of days. So, you know, do I want to spend the next 2 days selling into a candle that looks like that? The answer is no, right? Perhaps if we got, you know, a bearish candle that looks something like this today, that actually broke those lows, then okay, I would be looking for sells. But right now, guys, yeah, there's just not enough reasons for me to take any US dollar pair. If you look at pound US dollar, this potentially had a little bit more room, but no, right? Again, yeah, pound US dollar, we want to sell, but we're at a support level, right? I'm just not interested in selling into support. And you know, by the very definition, a support level is a buying level, right? Otherwise, it's crap support. There are buyers in here. The market has shown you that. It's shown you once, it's shown you twice. There's buyers in there. So I just don't want to sell into that. So yeah, that's the problem with US dollar pairs at the moment, guys. Okay. What else does anyone else want to look at? Okay, Habaloo, it's not a sell. That's enlightening. Gold. Let's have a look at gold. Now, the thing with gold is, right, and I have been saying this for too long, right? I hold my hands up, But for me, I haven't been able to get into gold, right? Because it just hasn't retraced into value, right? You know, I remember saying up here, oh, gold's a little bit oversold. You know, I'm waiting for a pullback. Never happened. I remember saying on this candle, I'm waiting for a pullback. Never happened, right? And I've been saying it up here as well. So gold is clearly a buy trade, and fundamentally it's a buy trade, right? You've got central banks buying it up. There's a little bit of uncertainty with the indices. Gold's a flight to safeties. You know, there's lots of fundamental reasons why we want to buy gold, right? But I need a technical reason to get in on the trade, right? I need a retrace. I need an area of value. And it's just the problem I've had is that, right? I don't want to buy up here, right? You know, where you're going to put your stop down here, right? You know, what I want to do is wait for price to retrace, you know, perhaps using the river, right? Perhaps moving down to here. And then we start getting a bullish reaction, right? In here, I'd be interested in buying, right? That represents value. But up here, it just doesn't. Gold hasn't represent value to me, and I haven't been able to get in on it. It's like when you buy anything, you know, I don't want to buy a car for 100K, right? I want to buy a car down here for 80K, right? The same car. Just no value at the moment. And what is quite unique about gold, I mean, this, you know, it doesn't happen that often. It's just like the perfect fundamental storm with gold, right? For all the reasons I mentioned. You know, it's become the ultimate safe haven and central banks buying it up, right? So it's rare that you will get a chart that does that, right? That does this, which it pretty much has, right? It's rare that you'll get a chart that does that. Normally, you'll get a chart that does this, you know, starts at the same place, but eventually comes back up to these highs. Now, this for me, being a technical trader, right, is impossible for me to trade. Whereas this is easy. Not easy. Trading's not easy, right? But, you know, the trend and the retraces make it easy, right? I just want to get in somewhere here. I'm not going to get in here. You don't pick the bottom. I just want to get in here somewhere. I want to get some value somewhere. Maybe you get it on the way up, right? Now, that is easy to trade, right? Because you're trading from value. And a lot of the time it retraces to the last high, right? It's a really nice setup. So yeah, that's the problem with gold. It's just been untradeable. And silver's been on the tear. Yeah, that's still going strong. It'll be interesting to see how the week finishes, right? Silver is at a big psychological level, which is the 50 level, right? I know all you fundamental traders would disagree, but the market reacts at psychological levels. You just have to imagine people who are in buys, right? The psychology of getting to 50. They'll be like, oh, I'll take some profit. Maybe I'll close the trade. And that ultimately opens some sell trades. And that's when you get a retrace, right? So gold, silver's at 50 and gold's at 4,000. I know it's sailed through it, but we might get, you know, a weekly bearish candle here. We shall see, right? They're just big numbers to consider for these commodities. So yeah, there you go, guys. It's been tricky to get in on. Gold is going to 10K. Difficult to doubt it, what's happening at the moment. Look, I want it to go to 10K, but what I want it to do is retrace first, let me get in, and then go to 10K. Right? That's the ideal situation. Right, what else are we looking at? What else did you guys want to look at? Yeah, okay, gaps on yen pairs. Yeah, So yen pairs, because of those gaps, have pretty much been like untradeable for me, right? Because, you know, they were all about 200 pips. I mean, this is euro yen, right? Over 200 pips. What a crazy gap up. Now, typically, right, gaps get filled, but this is quite an extreme gap. Now, if we just play this along and think about it, right, you know, the market wants to fill this gap, but we are clearly in this, you know, strongly day uptrend, right? The new Japanese Prime Minister came in. It's a lady. I can't remember her name. She's very pro-business. That led to a big increase in the Nikkei. And obviously, yen being a flight to safety, paired with the fact that being pro-business, she would want to reduce interest rates, right? So that just led to a very weak yen. Okay. Now, let's imagine price comes back to this level, right? On the day chart, and we get a nice big bullish candle. Now, you know, normally I would happily buy that back up to here. But because you've got this massive gap, I would still be conscious of the market wanting to fill that gap, right? Obviously, this is not an extreme gap, but these gaps, they want to get filled. So until those gaps get filled, I'm pretty much staying away from yen pairs, right? No matter how much I want to buy this, no matter how much the setup, you know, how good the setup is, right? If we get a nice bullish candle here, still conscious of this gap getting filled. So yeah, you know, but the reason was for the gaps was the new PM of Japan, and that's what created the gaps. So yeah, become a little bit untradeable for me. But you know, I look at 28 currency pairs, guys, every day. So there's more than enough other pairs. You know, I look at gold, silver indices. There's enough assets for me to trade, so I can happily stay away from yen pairs. Yeah, but crazy gap ups, really crazy. Okay, can we have a look at pound yen? We've also got euro US dollar here. Yeah, so pound yen will be the same, right? If we look at pound yen, you know, let's go to the weekly, right? You will want to buy pound yen until here, right? Then I'm not interested, right? So it has, you know, that's the weekly chart. That's still a good few hundred pips, right? But again, it comes back to this concept of value, right? You know, I just don't want to start buying up here. There's no value. If you go to the day chart, right, you know, there's no value up here, right? If we get a retrace into value, you know, there's this last high here, right? And we get a nice setup, then okay, I would be interested in buying it. Normally I would, but there's still this massive gap that you can't help but think the market wants to fill. So that's the problem with yen pairs. You know, I want to buy pound yen, I want to buy euro yen, but it could be some time before I do. And euro US dollar, we did take a look at euro US dollar. Okay, let's get rid of this. Let's have a look at your questions. Okay. Euro US dollar, yeah, we took a look at euro US dollar, guys. So that was just a no trade at the moment, right? It's the same with a lot of the US dollar pairs. There's no room here, right? There's no room. I don't want to sell into support. And this is the problem with US dollar pairs. If we get a retrace, right, then okay, we can come back down and test this support again. But selling into this support is just not a good idea. You know, generally speaking, don't buy into resistance and don't sell into support, right? here's a perfect example, right? You're in an uptrend, right? Resistance, you get this nice big bullish candle. You're thinking, I'm going to buy it. Yeah, just don't buy into resistance. Once it breaks it, start buying again. Yeah, just very simple technical stuff, guys. And for that reason, I don't want to sell into that. What was another trade we were looking at? Euro Aussie dollar's been a nice trade this week, but that trade is over. This gives us multiple setups, right? And just so you understand the setups, guys, this is what I'm looking for, right? And it's as simple as this, right? I just want to follow technicals. We are in a downtrend. Stop making higher highs. We broke this low, right? With a nice big bearish candle. Let me zoom in so you can see that, right? So as soon as we break this level, we're in a downtrend. And we potentially got all this room down to here. And then we had a nice retrace, right? On the daily, we had this nice retrace, and then price started to break down again. So, trades from here have been nice all week. Then we get a break, we get a retest. Trades from here have been nice all week, right? That's all we're looking for, right? And of course, fundamentals drive this, right? Of course. But what technicals do is give you the areas and locations from where you can trade. And if you look at the H4, this gives us multiple setups, right? So we had this break of this level, pullbacks, trades, breaks this level, pullbacks, trades, right? It's, what I'm showing you guys is not rocket science, it's straightforward technical trading. So, incorporate some of this into your trading, obviously along with your fundamental analysis as well. But technicals really give you the blueprint of where to trade from. Yeah, so there you go. US dollar 30. Let's have a look at the Dow Jones. Again, these are a little bit overinflated. If we look at the weekly, now, everyone's saying stocks are so overpriced. Are we due a are we due a drop? Are we due a retrace? Are we due a correction? Looking at the weekly, right? Let's just look at the facts, right? We're in an uptrend. We have a bullish candle, right? We're a little bit overextended, as in how far we are away from the river, but we are in an uptrend. So I want to buy the Dow Jones, right? If we look at the day chart, again, right, we are in an uptrend. It found this resistance here, but we're in an uptrend. Now, the problem here is this level hasn't broke. The daily chart has stopped making higher highs, right? And that is always a bit of a red flag to tell us that trend is slowing down, if not changing, right? So I'm not interested in buying the Dow Jones. I mean, just look at these candles. None of them are telling you to buy this market, right? And this level's holding. So for me to start buying the indices, I would need, a deeper retrace. If I drag this across, potentially down to here, this could represent some good value, this support level through here to take higher, right? Or we break these highs, big bullish candle breaks these highs, buyers are fully in control, then we could start looking to buy as well. So they're the two scenarios I would need to see to start buying the Dow Jones. For me to start seeing a potential sell-off, I would need to see a daily structure break, right? Because they don't happen that often, right? We're in an uptrend. I would need to see something like this, Now, if we break a key level, then yeah, I think, you know, indices have some room to the downside. You know, they're inflated, so we shall see. But technically, I need to see that. Whereas right now, we're in an uptrend and everything's pointing upwards. So why would you sell it? All right, guys. So yeah, thanks for your time. Thanks for your questions. Thank you very much, guys, for having me. Please don't forget to check out the channel if you're interested in technical trading and understanding that side of it. Hope you have a great trading day.
We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show. We often get asked by our US viewers, how do you guys trade gold and...
Hey guys, how you doing? Happy Thursday. The week is almost done. Hope you're all well. Hope you've all had a good week so far. So, what's going on today? Just bear with me for a second. Finally got the monitor set up, but still waiting for my sticky glue for the back panels. So please ignore the shoddy background for today. It should be arriving later. Anyway, I'm going to show you, I suppose we can start with a couple of reports. I wasn't sure if I was on today, so I didn't really think about too much in terms of what I could cover today. But we've got UBS discussing, can I make this bigger? Hold on. Let me just extend this so you might be able to see it a bit more clearly. UBS talking about silver. Nothing overly interesting. They are saying that there is a bit of FOMO coming into the markets, which is obvious. I mean, the silver market and the gold market are massively overbought on a technical view. So they are saying that they're selling silver's downside risks for a yield pickup as option volatilities increase close to 28% over the next 3 months. But they are long metals with a 6-month view. So essentially what I interpret that as, they're going for some short-term plays whilst looking for longer-term long positions. So interesting. So while silver might be, again, technically overbought, we might be due a little pullback, it seems common consensus within sort of smart money is to continue buying dips. There's one here by UBS again covering dollar yen. Actually, it's pretty underwhelming what they're discussing here. They've got very, very tiny targets relative to the current price. So they're looking for 152, 150, 148, and 145 through the third quarter of 2026. Bearing in mind, we've only just started the fourth quarter of 2025. So they're expecting a very, very small range really on dollar yen for the next 3 quarters. They also go into the idea that the dollar is still bearish in their view, which I wouldn't necessarily disagree. But again, common consensus between the sort of smart money institutions and bank reports and things is that they are going to sell dollars. The only real driver currently for the dollar is the fact that we've had obviously the surprise cut of 50 basis points by the RBNZ. We've obviously got political instability in France, and we've of course got the surprise election in Japan. So all of those things are contributing to people picking up dollars and selling it off those other currencies. Other than that, the fundamentals for the dollar are still quite weak. Ball out, hello. Rexilon. Hi, James. Can you check out DXY? Well, I've just covered the fundamental side of the dollar. I think Chris Pulver and Nick and myself, we all have very sort of similar views from what I've heard. It's kind of the idea that the dollar is seeing a little bit of a short squeeze at the minute in terms of there really isn't that much to hold the dollar up other than the fact that there are other places worse off. So essentially it's now a case of what is the least bad currency to buy, and it kind of just falls to the dollar. So there is that. So if we can see other things start to pick up, so if we see developments in Japan that might be positive, we see France specifically start to pick up again, we might start seeing dollar outflows. However, I think overall, we could be looking for around 99.5 towards 100 to maybe create a double top here, then start heading lower. However, what we also need to keep in mind is that we don't really have that much to go off regarding the dollar, because how can we price in the next rate decision? Well, as far as I'm concerned, it's very, very difficult to. The only things we can really look at is the CME FedWatch tool, which is pricing in a cut in the next decision. And we've also got what Powell has already said. And what he's already said was obviously very, very tied to the labor market. But we don't have any labor market news. We've got nothing to go from. So I think really the dollar is kind of just in wait and see. And again, we are seeing inflows due to other economies and other countries seeing problems. But yeah, I don't think there's really that much to go off, to be perfectly honest with you, for me anyway. I am still in my euro dollar shorts. I actually scaled in a little bit this morning. So I don't really have any money on the line here, but I was actually planning to pick up more euro dollar shorts if we continued seeing higher prices, which is kind of what I expected to see. However, it's kind of worked out too quickly, meaning I can't really build anything. I mean, I can scale into profits, but I was planning a DCA position where essentially I'm adding into drawdown to bring up an average price. And then when we do eventually get that downside, it's more profitable. But you know, I guess I'm just a bit too good. So there you go. Obviously, that's a joke. So euro dollar, I'm in shorts. I'm in a pound Swiss long. So pound Swiss is quite a nice carry trade at the minute. I'm not really a huge fan of the fundamentals for the pound or the Swiss, but because the S&P has neutral interest rates, which is obviously zero, it means we just get paid to hold. So as long as the trade isn't stopped out, then I'm just getting paid to be in the position, which is completely fine. And as I've already mentioned, in previous streams, we are at multi-year lows on pound Swiss as well. So it's quite natural to expect that we might have some sort of lift off here. Not when I say lift off, I don't mean a change in trend. I don't think this market's going to rally to the upside, but I think we could see something just back up to maybe 1.1, maybe slightly higher to 1.12, which is where Morgan Stanley has a target. But yeah, that's pretty much it. And I'm still in my S&P long position as well here. So portfolio is currently sitting quite nicely, but that's it. Yesterday, I mentioned to you, I did take a New Zealand or pound New Zealand long, closed this at break even this morning because we had absolutely no movement. So I entered about here and closed it again this morning about here. So yeah, that's that. Also, Bashi, you live nearby to him? Go and check. I don't live near Bashi. Well, I suppose for Americans it is quite close, but for UK people, I live quite far away from him. Check on pound dollar. Yeah, we can have a look at pound dollar in a second. James, are you in the US? No, I'm in England, in the UK, unfortunately. What's your bias in ES and NQ? I think they're just going to continue to the upside, to be honest. It seems we are in a bit of a... I'm not sure what the right term is, but I'm going to say like hopium or euphoria. Nick put it really well yesterday, actually, when he was talking to Chris. I think they basically said it's gone past a bull market into, can't remember the word they used, it might have been euphoria or something. But if we look at it objectively, we've got metals, specifically gold and silver, rallying. We've got indices markets rallying. The dollar's picking up as well. So it's a case now of which domino is going to fall. What's going to... what's the thing that's gonna fall off next? And to be honest with you, I don't know the answer. I have no idea. So yeah, we'll see. But I think for now, it's risky to say that we're not going to have more upside, just because the trend is very aggressive and there seems to be no stopping at the moment. I think the only thing that really could sway the markets is the government reopening, and then we start getting the data again for the labor market. And again, as I said previously, that's then how we can start expecting or having a more solid expectation of what the Fed decision will be next. So yeah, there's that. If we get poor labor data when the government reopens, then I would expect dollar to fall, equities, indices to continue higher, and metals to continue higher. However, if we get NFP, unemployment, those things to come back to the upside and show a little bit of stability, then I would expect indices to start pulling back, gold, silver to start pulling back a little bit, and the dollar to gain a bit of strength and see a bit more normality in the markets. My hair is outrageous. I've just not had time to have a haircut. I've been meaning to do it for weeks now. I just haven't got around to it, unfortunately. I'm looking a bit homeless though at the minute, so I do need to do it. LFI, hello, good to see you. But yeah, the shorts didn't do very well, to be honest with you. I uploaded a YouTube video this morning actually, but I decided to remove it. I put it on unlisted because I feel like I was a bit too mean. But yeah, it was. Oops. I don't know. It was just a reaction reel to an AI video. That's all it was, and people got really upset about it because I mentioned a certain strategy. But anyway, whatever. We're not going to go into that here. So as I was mentioning with silver, I would much rather be a buyer of silver than gold. So I think silver still has a lot of catching up to do in terms of the silver to gold ratio. So I'd be more than happy to pick up silver pretty much on any reasonable pullback. So whether it's to key levels like 48, 47, 45, 46, or if we just see simple moving averages bounces, that would also be fine. I'd be looking to be a buyer in either situation. However, I think the important thing is, if you're looking to do something like that, you would need to be prepared to hold silver for a long time. So it wouldn't be, well, it could be, of course, it absolutely could, but I wouldn't position on to buy these pullbacks like a sort of DCA style, expecting the market to just continue rallying. If you're going to look to buy silver on these dips, you need to be prepared for a little bit of a deeper pullback, whether it be 10, 15, 20%, and then over time, we continue higher. On the downside, well, depends if you're already in a position, but for me, because I'm sat on the sidelines, it's a downside because I'm missing out. But I would expect 55 to be the target by end of year on silver. So yeah, we'll see if that happens, but it wouldn't surprise me if we do. Anchor, hello. I don't think there's really anything else going on. So Nasdaq and Dow, I'd quite like to be a buyer of both markets, mainly the Dow, because we do have the edge find giving us a very bullish reading of 11. However, it's pretty much the same story across the board. All of these markets that are running higher are basically not giving bulls any way to get in. We're not seeing any reasonable pullback. I suppose down here could have been okay, maybe here again. However, it's kind of difficult really to spot a solid entry point in my view. Oh, you're an Elite Traders member. Good to see you. I appreciate it. Same thing with Nasdaq. So if we could see Nasdaq come down towards the 50 moving average, I might look to be a buyer. But on the other hand, as I'm already exposed to the S&P, I don't think I'm really overly happy to be going in too heavy on the US markets at the minute, especially with the government shutdown. Seems Eurodollar is continuing to run low, which is nice. I was looking at the support level to see if we maybe get a deeper pullback to around here, and then I could scale in again. But unfortunately not. It seems like we're just melting to the downside. So let's see what else is on the edge finder. We've got US dollar CAD. Did I mention dollar CAD? I don't think I did. So dollar CAD and dollar yen are quite interesting. So dollar CAD had a very, very bearish perspective over really the past couple of months, I would say. And it seems to have very quickly flipped to being quite a bullish market. So I am looking to be a buyer of dollar CAD at some point. But again, there is just no entry here for me to get in on. Dollar yen similar. We discussed dollar yen yesterday in terms of I'm a little bit hesitant to be a buyer just because of the intervention risk. So although simply put, there is quite a lot of reasons now to be a buyer of dollar yen, but there are those factors again of the intervention, the government reopening in the US, and we continue to get worse data. It's making me nervous to be a buyer. Is the Nikkei bullish? It is, and I don't like to look at this market because I was long here. We took a profit. Then I bought the Nikkei again here. I closed it pretty much here. I basically made nothing, and then I was a buyer again down here, and then closed it at break even. I missed, so I had 3 opportunities, and I just completely missed. Obviously, I couldn't have seen that coming, but still, it's one of those painful things to look back at, and you're like, I could have got that. Anyway, yeah, it's painful, but I still think we are going likely higher on the Nikkei, but the same thing applies. Is, are we going to see some sort of intervention by the MOF? Maybe. But if we put that to the side, then yes, I think so. So the reason that we're seeing the yen down and we're seeing the Nikkei up is because the Prime Minister Sane Takachi, I think is the name, is basically very, very on the side of rate cuts, on spending more money. So the concern really is that we're not going to see that path to normalization, and we might see more spending without any real regard for the debt. So yeah, we'll see. But fundamentally, it's pretty bullish for Nikkei, pretty bearish for the yen. Pound New Zealand. I touched on that one. So as I said, I did take a long position yesterday and closed it at break even, just because I wasn't overly satisfied with the price development. However, it seems to be picking up again here. So I might look to be a buyer again at some point. Maybe if we can have a bullish close on this H4, I would consider it. Of course, we do have the Edge Finder giving a very, very bullish reading of +9. Dollar CAD we've discussed. Aussie CAD's back on the top setups as well, which is interesting. Because the Aussie CAD has been a little bit, there we go. Aussie CAD's been a little bit tricky because it had a very, very strong run very quickly. And then it, again, very quickly came into this previous high and we saw a rejection. So it might be an idea to potentially position long if we can see this pullback develop a little bit further, maybe create a double bottom or come into a 200 moving average, whatever it is, come into some sort of zone, then look for price to continue higher, break, and then retest this level, and then again continue higher. That could be a play. But I mentioned it on, I think it was yesterday's stream, that the Canadian dollar, although the fundamentals are very bullish, very bearish, it's mainly priced in. There isn't really any new developments or any catalyst to drive the Canadian dollar to have a large surge of volatility. So although it's definitely pressured, it kind of puts me off this position for now anyway. Musa, who's this? Where's Nick? I am Nick. Plastic surgery is a great thing. No, I'm joking, obviously. I am James. I do segments on this show a couple of times a week for about 30 minutes. I think Nick's probably had his segment. Nick normally comes on first, then it's the guests that come on after. So you could probably just rewind and see Nick. Ball Out is talking about Nat Gas. I was watching Nat Gas. We have finally had a flip bullish on Nat Gas on the H4. Oh, sorry, it's Nasdaq. Nat Gas here. So I was looking at this, but I'm now in a situation where I could look to be a buyer. Technically speaking, there is a reason now for me to be a buyer in Nat Gas. But again, fundamentally, I'm just not knowledgeable enough to justify it. So I really need to sit down and make some time to look into Nat Gas and see what's actually going on in that market. Slugmeister, hello. How are you? I don't know if I'm the last guest. Bear with me for a second. Let me just check the schedule. So I think, was it meant to be Miko or Marco? Anyway, whatever. Oh, it's Miko that's supposed to be in my slot. So it'll be Marco coming up next in about 10 minutes. That makes sense. Okay. I am James. You're a legend. Appreciate it. Okay, so I don't think there's really much else that's on my to talk about list. Euro pound's getting a bearish reading, which I don't know. I've not really seen anything. Sorry, my camera's cut out, it seems. I've not really seen anything about the euro pound. However, the technicals do seem okay, but relatively range bound overall. Hopefully my camera comes back in a second. Let me see if I can fix it. There we go. Hello again. So yes, euro pound seems relatively range bound on a higher time frame. So it doesn't really tell me that there's a defined range and a defined direction this market wants to go in. Although the immediate trend right here does look quite bearish. It's tricky because there is that view, but then we start going into sort of a mean reversion idea where we've discussed this quite a lot over, I think, maybe a month or two ago. We were discussing euro pound's mean reverting tendencies quite a lot. So with euro pound, because they're very correlated, it's not unheard of that we see these rallies and then we see a complete revert back to the downside. And often, or more times than not, the reversions down wipe out the previous lows like this. So let me show you. So here, price rallies and very quickly corrects. Price rallies, we've not had the correction. Here, rally, move back down and lower. Here, rally, move back down and lower. Same thing here, rally, then move back down lower. So it's just one of those markets where you can expect it to come lower over time. But at this point, I'm just not 100% confident in being a seller, because I was selling it during this rally here, and I got out roughly around this price. I got out for a very small profit, I think. But yeah, I'm just not sure if I'm willing really to get back in and start a new DCA position on that one. Although I think, yeah, you do get paid swaps. Actually, let's double check the Edge Finder. Carry trade scanner. Euro pound shorts should be paying us swaps. It does that. So that's another thing. When we're discussing about DCA positions, one of the biggest things is swaps, because if you're looking to basically be adding into drawdown, one of the things that can be a really nice buffer and really benefit the position over time is if you're getting held to hold, which you do in euro pound and euro dollar shorts, which is good. Please explain pound Swiss. So pound Swiss is a carry trade. So because the S&P has an interest rate of 0, we now get we now get paid to hold long. So it's basically what I just said about euro pound, but in reverse. Rather than holding shorts, we hold longs on euro pound and we get paid. So it's essentially what we saw on the dollar yen, when we saw dollar yen rally, because it was the carry trade. You know, that's just what everyone referred to it as. It's the same idea, although the yield gap's not as big with with pound Swiss. So it's not a case where we're going to see, or very likely we're not going to see, pound Swiss start to rally to the upside and create new all-time highs and it just be a massive bull trade. But it is reasonable to expect it to slowly run higher and then maybe eventually continue this overall downtrend. Along with that, we are at these multi-year lows, which is reasonable to expect we'll see a reaction at this point again. So yeah, that's kind of the idea. It's very basic, but so far it's working out quite nicely. Hi, James. How do you keep track of all the fundamentals? So I'll show you. I just need to be careful. I'm not going to show you. I'm just going to unshare my screen for a second because I've got some private things on here I don't want to share by accident. Just give me 1 second. Okay, I'll put my screen back now. There you go. Okay. So I would highly suggest all of you do this as well right here. So every week I will make a Notion file and I will go through everything. So I'll go through Edge Finder setups, I'll go through bank reports, news articles, I'll have a look at basically everything that I can get hold of. Anything that is interesting or relevant, I will add it in here. So I'll build up my weekly forecast and I'll say, okay, well, this bank's saying this institution says this, Edge Finder's saying that, blah, 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 blah. I'll put it all together and I'll make a list of all of the G7 currencies, which is what I trade. And then I'll come up with some trade ideas. And these are, maybe I won't take them, maybe I will take them. And that's how it works. And then if something is interesting, I'm like, okay, this is a good trade, I want to take it. I'll then zoom in on that trade. So I very often say that I focus very heavily on a couple of different things. So, if someone asks me about the Australian dollar, I might not have too much on that because that's not something I'm bothered about trading right now. My focus has gone to the pound Swiss and the euro dollar. So you can see pound Swiss, I've completely fleshed out everything about the trade, all the fundamentals, the yields, everything I need to know about it. And that's how I work. That's my process. And the thing is, it's time consuming, it's boring. Well, actually, I don't think it's boring. I find it very fun. But to most people, that doing that it's not an interesting thing. It's slow, it takes time. But you know, that's why some people do well. That's why some people don't. Obviously, everyone's process is different. But if you can't sit down and dedicate a couple of hours to your career, then, you know, what's the point? You may as well go and get a 9 to 5. I don't mean that in a disrespectful way, by the way. I mean that in a way that you kind of have to enjoy trading to really become good at it. So it's not a case of I have some magical idea or some magical strategy. I literally just follow the trend using moving averages. I wait for pullbacks using fibs, and I rely on my research to carry those ideas and to position me in the right directions. So that's that. Anyway, that might have been a bit of a long explanation, but hopefully it answered your question. Papa, hello. You had made a video on Notion. Yeah, I mean, that, I'll be honest, that was a bit of a sales video, but yeah, that's what it is. So I've got about 2 minutes left. So let me have a quick look at oil. I don't think there's anything going on with oil. So the narrative that I've got with oil, and I have had for the past couple of days, is really just selling any upside we see. Now, it's very important to note that that's not based on fundamentals. I don't really have anything for oil, but that's more just looking at how prices moved. So we came up, rejection, could have sold here, price came up, rejection, could have sold that, price came up, sold, price came up. So it's more than likely, it's just a case of just selling the highs now, or obviously attempting to sell the highs. But in terms of really any trade or any direction, I'm not 100% certain, to be perfectly honest. Again, my camera has cut out, my apologies. That info will help a lot. Good, Johan, I hope so. That's the thing, it's you know, you don't have to use Notion. You could use a Google Sheets, you could use a notepad, pen and paper, whatever. It's just a case of, rather than sitting there on a Wednesday and saying, oh, prices just pulled back, should I buy, should I sell? And then taking it because you're scared you're going to miss the entry. You've got everything you need done on a Saturday or Sunday. And then on Monday, you're ready to go. You can just set your alarms, mark up your technicals, whatever it is you need to do. And then throughout the week, you can just, you know, if your alert gets triggered or your pending order gets triggered, you can rest knowing that that's a valid trade. Bitcoin, I've got about a minute left. So Bitcoin seems to be taking a little bit of a hit after reaching, was this new all-time highs? It seems it was, wasn't it? So Bitcoin hit 126,287, and it's seen quite a sharp projection off that. Very likely profit taking mixed with the dollar strength. So would it be a good idea to buy Bitcoin is the question. Is it on the Edge Finder? It does have a score of 7, so it might be worth basically the same approach I mentioned on gold and silver of just buying pullbacks. So how would we do that? We'd take a fib, low to high. So yeah, I'd be looking for this third option here. So if we could pull back into around the 50% level, come towards the 200 moving average, I might be tempted then to take a stab at going long. That would also sort of retest these, oops, that was a horrible line, retest the previous high here. It's kind of like a trifecta trade. It would be break and retest 200 and a 50% retracement. I think that's a reasonable idea to go for. It's not a sales video if it helps people. I suppose that's true. Anyway, ladies and gentlemen, it's my time to go. I've not a message, but I'm going to assume that the next guest is here. Guys, have a good one. Stay safe. Don't get margin called. And I will see you probably tomorrow. Stay safe.
Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence. to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone, welcome to my segment of the stream. So I do hope everyone is doing well. Let me just turn on the second light. I wasn't here yesterday, I couldn't make it, but we did have sort of a special because of the FOMC meeting minutes. So if you're wondering how this turned out, it was kind of dovish. So the Fed mentioned, you can even find this on Financial Juice. So if you go to Financial Juice, FOREX, and you search for the red news, let's see. So that was October 8th. So let me just scroll a bit more. Okay. Here it is. So Fed, most said likely appropriate to ease policy more this year. A few officials could have supported no rate cut in September. Okay, but basically it was dovish. So if you go to the Fed Watch tool, and right now it's all about the rate cuts. That is what is on everyone's mind. So for October, you have 94.6% chance of a rate cut. In December, you have a 79.6% chance of another rate cut. So 25 basis points, something like that. I think it's pretty likely, it's highly likely to get rate cuts in October. And for December, we're going to see, but I do think they're going to cut. So I do think they're going to follow their future projections. And that's kind of what they're saying what they were saying in the FOMC meeting minutes. What I don't like is they keep flip-flopping from one stance to the other. So on some occasions they are dovish, then they're hawkish. So I know during the Jackson Hole speech, Powell switched from a hawkish stance to a dovish stance, said, well, it may be time to cut. And then they delivered a hawkish cut, meaning they cut the interest rate but with hawkish commentary, okay? And now they're back being dovish. So all of that flip-flopping, it reminds me of Trump. And as a trader, it's pretty hard to follow. Best to stick to the future projections that they published, which is 2 more rate cuts of 25 basis points in 2025. So, some updates about my watch list. I have the Nasdaq, gold, silver, Bitcoin. Bitcoin I have on here because we did go into an all-time high, but unfortunately, we kind of retraced. So this was a key resistance level that I personally was looking at to get maybe like a break and retest, and then I would look for buy setups right here. But unfortunately, it looks like we broke, left double wicks, and retraced with a big red candle. Okay. So Bitcoin is a signal on the Edge Finder. If we find Bitcoin, it is actually a buy signal. I do like it. I think the Nasdaq story is extremely bullish. I think Bitcoin acts as a technology stock. You have rate cuts currently happening. Rate cuts should be bullish for Bitcoin. People should have, let's say, some extra money to park into Bitcoin. Inflation is a problem. So that is not the best thing. But maybe also some people are thinking, well, since inflation is coming, since inflation is already pretty high, let's take a look at the numbers in the United States. 2.9%. That's pretty high. That's way above target. Maybe they're saying, let me buy some stocks, let me buy some gold, maybe let me buy some Bitcoin, because overall, the US economy is doing pretty well. So Bitcoin, I would just like to see Bitcoin break out a bit more. So break far above this level of resistance. Okay, that's what I'm looking for. So let me check the comments. Hey Slugmeister, what's up? $40 drop in gold. Papa, wow. Hey, what's up? Joshua, hello. So Bitcoin is on my watch list. I was talking about the Aussie NZD. I'm just gonna finish through. I was talking about the Aussie NZD. I was looking to buy it, and I was looking at the RBNZ rate statement. What happened? Well, they cut rates aggressively. Previous number was 3%. Forecast was 2.75. Actual number was 2.5. That's quite a lot more than what was priced in. That had a very dovish reaction on the New Zealand, so the New Zealand lost a lot of value. You can take a look at Aussie NZD, you can take a look at NZD USD. See how this chart melted lower? So unfortunately, we did not reach the level I was personally looking at, which was, let's say, the 20 MA. I was looking to buy the Aussie NZD around the 20 MA. That would have been interesting because the Aussie is, in my opinion, pretty bullish, looking pretty healthy right now. This is a really nice uptrend, and the New Zealand is pretty weak. So now we're kind of too far away from my entry. Now I would, let's say, I would look for maybe another pullback. But anyways, I'm going to remove this one from my active watch list right now. So also news, USD CAD. If you are, damn, this is now approaching my take profit. If you are in USD CAD, this was a signal in the A1 Discord. This trade right here. Also, by the way, if you want to join the A1 Discord, if you want to get trade signals, trade analysis, trade breakdowns, and general information about exactly how we're trading, you can do so using the links in the description of the stream, and you can use my discount code, which is MARKO. So this discount code works both for the A1 Discord and for the Edge Finder. So don't miss out. Join us at A1 and maybe we can trade together. I closed this one yesterday. So I closed it, manually closed it. I didn't want to wait for the price to hit the take profit. The reason was I thought we were kind of slowing down here on the top, okay? I thought we were kind of starting to ascend. Maybe the price was getting exhausted. Also, we can slap on the moving average. Simple. And look at the 200. No, okay, see? So we have the 200 moving average, which was kind of acting like dynamic support. So that was also a bit concerning, that support level, or sorry, that resistance level right there. And I kind of wanted to reduce my CAD exposure. If you're in the A1 Discord, you know I'm long Aussie CAD, I'm long Euro CAD, and USD CAD was pretty close to take profits, so pretty close to the swing high as well, and decided to get out of this one. So it was a nice winner in the end, I think plus 0.96%, something like that, or 0.96 R, which is okay. Nice quick winner. I'm still bearish on the CAD. I still think the CAD is the least attractive currency, or the best currency to go short. So maybe I can re-enter this position a bit lower. I will consider that scenario. So if we maybe pull back close to the 20 MA and I can get a better reward to risk, that may be a smart thing to do. So that's USD CAD, Aussie CAD. It's in profit, running in profit, but I'm trailing my stop loss. I'm trailing my position. Hopefully this can continue higher. So hopefully this can happen. And I'm just going to trail my stop loss. If this trade goes into 2026, I don't mind that. because it's positive swaps, because I think long-term the CAD is very weak. So the CAD is good to short for the next couple of months, for sure. That's just my analysis. Euro CAD in drawdown, so not looking the greatest, looks pretty corrective, but I'm going to keep holding it. I still like the euro. I still hate the CAD. So the fundamentals are still there. Nothing much has changed. You can even say, well, we're kind of following this trend line as this sort of dynamic support like this. Well, maybe we kind of broke that first one, but yeah, you can say there's still some room for this to pull back, for the trade to still be high probability. That's about it for my watch list. So let's remove this green flag, which means I'm no longer in the trade. That's pretty unfortunate, because today it started to pump higher by a very large amount. So plus 22%, plus 0.22%. That's pretty nice. But anyways, decision was made. This trade was closed. So that's about it. I can't do much on this one. Let's see. So Slugmeister says, I closed a few partials and trailed my stop loss on NZD/USD. So I do believe Slugmeister went short on NZD/USD right before the interest rate decision, if I'm not mistaken. So right before this event right here, which was probably somewhere in this area, touching the 20 MA. If you went short at that area, you probably would have had some nice profits. Again, running quite nicely. The New Zealand is still pretty bearish, continuing to be bearish. The dollar, I like. For the dollar, I'm short-term bullish, maybe longer-term a bit neutral, but short-term, we could be bullish for the USD. So nice position. You may be asking, am I looking to get in on a sell setup here? I would consider it, but I would need to see the price be closer to the 20 MA. I wouldn't go short right now. So maybe going short right now would not be the smartest setup, but going short close to the 20 MA may be a bit better. Okay. So if we do pull back, if we do get something like this, if we do get something like this, I may consider getting in on a short trade. So yeah, that's it for NZD/USD. As far as the currency world goes, I've been doing some research, I've been doing some reading, and a lot of big traders, a lot of big investors seem to have a stance on the Forex market that there is quite a lot of currencies that we can sell. So there's quite a lot of currencies that are not doing well, but there is very few currencies that we want to buy. So that's kind of problematic because in Forex, if you want to sell a currency, you need to sell it against something else. So both short term, I mean the pound, the New Zealand, the CAD, they all look, long term, they all look pretty bad. And the strong currencies, let's say strong currencies, the dollar, the euro, the Aussie, they're strong, but they're not super strong. They're not producing awesome numbers. So the currency world right now may be in a bit of a problem. Volatility is definitely down, so markets are not moving as much as they can move. And again, most of the world may be struggling a bit. There are some signs of stagflation, especially in Canada, especially in the UK, even in the US. In the US, you can see some, let's say, numbers that are not the best, such as NFP, right? So NFP is in this sort of a downtrend. Now people are saying NFP is in a downtrend, but the last few years of NFP have been extraordinary. So even though we're in a downtrend, the US is still very, very healthy, and this is not a cause for a concern. I would agree with that. I think after 2020, we had some awesome years, some rock star performance in the United States, and that sort of extremely high performance cannot last for a long time. So it may be time for the growth to slow down a bit, for NFP to slow down a little bit as it has been doing, and for the markets to be a bit more conservative, let's say. So I'm not calling for a recession. I'm just calling for a bit more slower growth or smaller growth, or yeah, something like that. So currency market, not the most active right now, but what is extremely active, especially this year, gold and silver. I think also someone mentioned gold. Styro, I love you too. Thank you. So let me see the comments. There was a comment about gold, so we're gonna cover gold. Joshua says, why doesn't anyone talk about trading the lira? It seems like the perfect short. If you can give me the ticker, I can take a look, but it's a minor currency, so it's really not popular. Very tough for people to trade these currencies like the lira because it's not available on every broker, as far as I know. So if you can give me a specific ticker, I can take a look. Are you still waiting for a correction or a drop for Nasdaq and gold? And do you think gold will finally drop soon? Well, an interesting thing about gold, I was watching the television yesterday and I was watching the news, and there was a news article talking about the massive explosion in the price of gold. So they mentioned gold just crossed $4,000. Okay. And usually, what I learned from the crypto world, when the news mentions Bitcoin, when the news mentions massive, let's say, explosion on Bitcoin, massive bull market on Bitcoin, like we had in 2018, like we had in 2021, usually there's a crash right after. Okay. So what is the methodology behind that? What is the thinking behind it? Well, basically, when everyone knows about something, so when everyone knows that it's a good time to buy Bitcoin, that Bitcoin is flying, usually everyone has made a decision. So they made a decision if they want to buy, sell, or stay out. And once everyone knows about a bull market, once everyone has made a decision, then there's very little buyers left to pull up the price. So the selling starts. And that's what happened in 2018 here, the selling, 2021 sell-off. I think also in March 24, there were some news articles about Bitcoin, so we had a sell-off. I'm thinking a similar thing could happen to gold right now because, again, all of the news outlets are talking about the crazy pricing of gold. So pretty much everyone, even my grandma, knows about gold and has made a decision if they want to buy, sell, or stay out. So if there's no more buyers left, well, that means only the sellers will be there, especially some profit taking around the 4,000 level, which could mean we get a sell-off. Now, am I going to sell gold? Am I going to go short? Am I going to place a bet against gold? No, I don't want to do that. I think that would be very silly because this is such an explosive move. There's no guarantee that we will pull back here. Just the general sentiment seems to be a bull market frenzy. Everyone seems to be talking about gold. Everyone seems to be buying gold or has bought gold. So it may be time for us to pull back. I'm personally looking to get in. I'm actually looking to get in on the uptrend. But I want to get a correction first. So I want to get a discount. I want to get a better reward to risk. I want to see something like this. Like this, let's say. So a nice, healthy sell-off, and then I would look for buy setups at, let's say, this level or this level. I think that would be optimal. So maybe your first position you execute here, second position you execute right here. I do think long-term, this is still very bullish. Inflation is still a major issue. And what is the best way to protect against inflation? Well, it is to buy gold. gold is the #1 asset to hedge against inflation. So I think that's going to continue. You have Trump's big, beautiful bill coming in 2026. That's going to be a lot of spending. It's going to increase the US debt. It's going to increase inflation. It's going to increase uncertainty, and investor confidence is going to fall. Okay, so they're going to be buying gold. So I want to get in, but I want to get a cheaper price. And now it is time for me to mention the sponsor of today's video, which is DNA Funded. So the last time I was on a stream, you guys or someone asked me, how is my funded challenge going? Well, here it is. So I'm up. This is a 50K account. I'm up plus 1.14%. I have 2 trades running, S&P buy, pound dollar buy. First one is in a bit of profit. Second one is very close to being stopped out. I'm risking 1% per trade. And if you guys want to get more capital, if you're looking for a prop firm, well, DNA Funded is a great option. It's a reliable prop firm ran by professionals. It has competitive pricing. So all of those prop firms offering 70, 80% discounts, they're scams. DNA Funded has a good price, but you can get an even cheaper price if you use our discount code, which is A1 Live. So you can get 25% off. Okay, A1 Live at DNA Funded gets you 25% off. So most of these reliable prop firms that have good trading conditions and that are going to be here for the next few years, they have similar pricing, even DNA. But with our code, it goes down a lot, so 25% off. And at that point, I think it becomes the best option in the prop firm space. So by the way, this challenge is only to test my ChatGPT trade signals, which is a series I'm doing on my YouTube channel. So it's not that serious, I would say. I have some other funded challenges running for my own personal trading. But so far, ChatGPT is doing pretty well, up plus 1.14%. And we had quite a significant drawdown. So yeah, the drawdown was up to 47.3 thousand. And now we're back to 50.5. So pretty good. I will update you on the situation. Getting back to it. Okay. My approach with gold is the same for silver and the Nasdaq. Okay. Tara, what's your channel name? My channel name is Marcos Trading Journey. So here it is. Trading Journey. That's it. And also let me check the comments. I don't hope we get another pullback on NZD/USD. Yeah, because you're short. So maybe we don't. We will see. Martin says, hi, Nick. Hey, Martin. But this is Marco. Nick was here, I think, an hour ago. So usually Nick opens the stream. Then you have a couple of guests. Then I end the stream. That's the usual schedule. USD. Okay. Yeah, Turkish lira. We're going to try it right after the Nasdaq and silver. Max says, with some ceasefire and peace path ongoing, we may see that pullback. I didn't read anything about the ceasefire or a peace talk. So I'm watching Financial Juice. I'm watching all of the latest news. I didn't see anything in there about a potential ceasefire. Maybe I missed something. If you can put it in the comment section, I will look into it. Okay, how much is 1% on your 50K account in terms of risk? It's $500. Okay, so this is a 50K account. That means 1% risk is $500. So if I risk 1%, that means when I lose $500. And I think GBPUSD buy is really close to hitting the stop loss, because why is the swap so high? What the hell? I'm gonna have to look into this. Anyways, so GBPUSD, the profit is minus 409, and my maximum risk on this position was 500. So pretty close to hitting the stop loss. Anyways, getting back to it. Silver, same position as gold. I think we're overextended. I want to get in, so I want to buy, but I want to wait for a pullback first, right? I want to get into a pullback. Nasdaq, I have the same stance. So the Nasdaq just seems to be going higher. The Nasdaq just seems to be exploding. There's no signs of stopping this train. The pullbacks are minimal. There was no room for me to get in. I want to get at a cheaper price. I want to get a better reward to risk, let's say. Is it time for a pullback? I don't know. This market just seems to be exploding higher. Also, you have a thing that's called the Santa rally. Okay, Santa rally is a rally into the year's end. So if you look at the Edge Finder and you look at the monthly seasonality, and you look at the SPX, you're going to see that usually November and December are positive. Not by a little, but actually by a large margin. So the Santa rally means end of the year, you get a lot of buying, you get a lot of spending by consumers, you get Black Friday, which is the best, let's say, day in the year for sales. So it boosts all of the revenue, all of that stuff. You get it at the end of the year. Everyone is trying to squeeze out the most. Everyone is trying to inflate their stock price the most. Everyone is trying to spend the most. Okay. And that is why you get this occurrence. So is it time to stop? Is it time for a pullback? I would say it's not. I would say this can very easily continue trucking higher as it is. Let me check on the S&P. S&P, yeah, it's pulling back minimal. The pullbacks are absolutely minimal. Just touching the 20 MA, you can see how good the 20 MA acts as dynamic support. Basically, we touch the 20 MA, go up. See here as well. Touch, small touch, we go up. So interesting stuff. Okay, let's see. So Charvong says USD CAD pumping. What is the catalyst? Okay, nice. So it looks like it would have hit the stop loss nevertheless. That's okay. Actually happy to see this work out as planned. I think it's just general dollar strength. Yeah, just the DXY exploding higher. Pretty interesting because yesterday the FOMC was dovish, but I do think there was no massive catalyst to sell the dollar anymore. I do think the markets were overextended dollar shorts, or there were too many dollar shorts. Some sort of rebalancing was needed. A short squeeze actually happened. So just this is the dollar gaining value, and it is being reflected in the USD CAD. Also maybe reflected in gold, because as the dollar gains value, gold against the dollar loses value. Let's see. Slugmeister says, I'm also running a 50K demo to see how to trade and manage big accounts before I start prop firm challenges. Well, that's great. That's a great way to practice. Israel Foreign Minister, we don't have any intention to renew the war. Okay, that's interesting. I actually thought you were talking about Russia and Ukraine, but this is a different territory. But still good that they're not planning to escalate. The 1% loss is not derived from overall loss limit. No. So basically I have 10 losses before I blow the account. Right, I have 10 losses before I blow the whole account, because if I risk 1% per trade, and I can go into drawdown 10%, maximum drawdown is 10%. That means 10 losses until I lose the challenge. Okay. Yeah, thank you, Max. I'll have to look into it on Financial Juice, but that's good information. And that may be a case for gold selling off a bit. But I would say it's not a huge case. I would say gold selling off is most likely going to be some profit taking because we reached a very important mark, which is 4,000. And you have the DXY pumping higher. So you have the DXY going to the upside. What do you use for your personal research and to gather information? I mainly use the Edge Finder, okay? Because it collects all of the data, all of the numbers from around the world or the internet, puts them into one place and makes it very easy to get the data you need. If you want to get the Edge Finder, you can get a very nice discount with my code, which is MARKO, okay? So I also use just the Forex calendar to see the numbers, to see what's coming out in terms of the news. And I use Financial Juice to see what the breaking news is. For example, here, Fed meeting yesterday, most said likely to appropriate to ease the policy more. Okay. So those are my 3 favorite research, let's say, sources. I also heavily follow Brent Donnelly, who is a very successful trader. I heavily follow what Nick is doing on his channel, and I heavily follow Vukovic, who is a hedge fund manager. Max says, no, yeah, Russia and Ukraine would be wonderful. Yeah, nothing on that front. What are my ChatGPT parameters? If you want to get more information on that, you can check out my series on my YouTube channel that I did. It tells you everything that you need to know. So go to my YouTube channel and just search up ChatGPT trading challenge. You're going to see everything in there. I don't have time to explain everything now, so sorry about that. But it's very simple. It's a very easy prompt. It's like a couple of sentences long. Okay, so why in FA GP is a sell and DXY might get to 100, you buy GU? No, I wouldn't buy GU. I'm actually looking to sell GU. I'm very bearish on the pound. I'm bullish on the dollar. I want to sell it. I'm looking at this level of support. Okay, so I'm looking to see if the support will get broken, and then I would actively look for some nice sell setups. So pretty good to see the dollar moving. I like it. I think it's pretty good. We see the dollar pumping higher with such force. That's looking pretty healthy. So yeah, let's see what can happen out of this. GBUSD shorts may be on the table. Yeah, if we break that level, this level right here with conviction, I would say it's game on. I would say that that's going to be pretty good. I don't like the pound. I think the CAD is the worst currency. Second runner-up is the pound because the UK is getting some very, very bad fundamental data. Okay. A last question for today is going to be from Slugmeister. According to you, Marco, do you think 1 year of successful trading on a strategy is a good sample size? I do think it is. I do think it is. And I do think if you're successful, you can look for more capital or you can look at prop firm challenges. I think 12 months is a good sample size. Is it the best sample size? No, it's not, because you can have a strategy that works for 1 year and then stops working the next year. But again, 1 year is still, I would say, pretty good to start putting in real money, looking for more capital, and stuff like that. Okay, so my watch list, what I'm mainly watching, Bitcoin is starting to sell off heavily. I liked Bitcoin this week. I liked Bitcoin a lot. So gold and silver, let's see if we can get those pullbacks. Okay, let's see if we can finally get those pullbacks. I told you yesterday, gold was in the news. That's a great contrarian signal that gold will sell off. So thank you very much for watching. I won't be here tomorrow, but you can catch me next week on Trader Nick. I will be live streaming every single day. So have a great rest of your week. NFP is still delayed. US government is still shut down. If there's any updates, we're going to talk in the Discord. So thank you and see you.
You've been watching A1 Trading Live. We're here Monday through Friday, where you can tune in to hear insights from professional traders from all over the world. Make sure to subscribe for future streams. And as a reminder, if you're looking to get access to free courses, prop firm discounts, and free trading tools, head over to a1trading.com. See you next time.